Hey everyone, if you didn't already know, Nvidia outsources all of the or most of the manufacturing for its GPUs, and Taiwan Semiconductor Company is its primary manufacturing partner. So what happens at Taiwan Semiconductor manufacturing has huge implications for Nvidia. And in that regard, Taiwan Semiconductor manufacturing had some good and bad news for Nvidia stock investors when the company reported its quarterly financial results and management held their quarterly conference call with Wall Street analysts and investors. So in this video, I'll share with you the good and the bad news that came out from Taiwan Semiconductor as it relates to Nvidia and what it could mean for both Taiwan Semiconductor stock investors and Nvidia stock investors. So let's start with the bad news. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Taiwan Semiconductor management saying, we are happy to see that many of our customers' structure profitability is improving in these past few years. And that's been true. Nvidia and other companies that Taiwan Semiconductor serves are experiencing increasing profitability. Nvidia specifically, its operating profit margin has been soaring. Taiwan Semiconductor saying, at the same time, we have faced rising costs challenges due to increasing project complexity, a leading node, meaning latest generation technology, higher electricity costs in Taiwan, global fabrication expansion in higher cost regions, and other cost inflation challenges. And if you didn't know about Taiwan Semiconductor's expansion, they're expanding outside of Taiwan now. They're adding new locations in Japan and in the United States, spending billions of dollars to add those facilities. And of course, those facilities are going to come at a higher cost. And so their production is not going to be as low cost as it would be if they would stay in Taiwan and expand their existing base in Taiwan. But the reason they're doing this, the reason they're expanding outside of Taiwan is to diversify away from the region, for one. And then secondly, those regions that they're expanding to are offering TSM billions of dollars of incentives to build their manufacturing facilities in those regions. So all in all, Taiwan Semiconductor is facing rising costs. And so it's telling investors, look, we're happy that our partners are having these lucrative profit margins. We're happy for them. But at the same time, our costs are going up. And so we're going to continue to work closely with our customers to see our value. And so why is this bad news for Nvidia? Well, this sounds like a price increase. This sounds like a price increase is imminent. This sounds like Taiwan Semiconductor saying, look, you're experiencing increasing profit margins. We're experiencing higher costs. I think it's time for us to increase our prices, and you can surely absorb those higher prices because your profit margins are soaring. And in fact, let me share with you Nvidia's operating profit margin, which is indeed soaring. 59.84% in trailing 12-month operating profit margin for Nvidia. And look at how this has just soared higher in the last year and a half or so, from around 20% all the way up to 60%, tripling its operating profit margin. And it's now more profitable than Taiwan Semiconductor, where for the last decade, Taiwan Semiconductor had a better operating profit margin than Nvidia. And now all of a sudden, Nvidia is way ahead of Taiwan Semiconductor, which is not too shabby itself at 41.82%. But this is what Taiwan Semiconductor management is alluding to, saying and pointing out, hey, your profit margins are really strong. Ours are kind of dwindling. So I think it's a indication that they are going to be raising prices. And that's going to be bad news for Nvidia. That's going to impact those excellent operating profit margins I highlighted earlier for Nvidia. But as you also noticed, Nvidia's profit margins are incredibly high. And so they can afford a little bit of a decrease. They can afford to pay a little bit more for this supply and take a little bit of a dip there in their operating profit margin. Still, it's not good news, right? That's bad news. If you're an Nvidia stock investor, you don't like to see this kind of statement. You don't like to see the potential of higher prices charged by its supplier. And so it's bad news for Nvidia stock investors. All right, so now let's move on to the good news. And the good news is regards to new technology. Taiwan Semiconductor, as part of those rising costs it highlighted earlier, has invested in creating the latest generation and most innovative technology. And what they have coming out, right now, they're just wrapping up production of their 3 nanometer technology, and they're working on introducing the 2 nanometer technology. And the 2 nanometer technology will deliver full node performance and power benefit, which is 10 to 15% speed improvement at the same power, or 25% to 30% power improvement at the same speed. It also adds more than 15% chip density increase compared with its 3 nanometer technology. So let's break each of these down individually. So if you want greater performance, just the most powerful performance, then this next level technology is going to offer you 10 to 15% improvement using the same amount of power. So just more efficiency, you're going to get more performance, up to 15% better performance. Or if you want to save costs and you want to keep your performance where it's at, you've liked the performance and you just want to lower cost. Well, this next generation technology will lower the cost or lower the power consumption by 25 to 30%. Additionally, it has 15% greater chip density, meaning for the same data center, you can add more chips because each chip will have more density. And so it allows you to utilize your data center space more efficiently. So these upgrades will provide a big benefit to NVIDIA because it will improve performance, improve efficiency, improve the return on investment for these chips. So that's great news for NVIDIA. So TSM says the progress is developing well, ahead of schedule, and the N2 is on track for volume production in 2025. So starting next year, they're going to ramp up production of this next generation technology, and undoubtedly NVIDIA's latest technology will incorporate this into their GPUs. Now, on top of the N2 technology, they also have the N2P, which will add an incremental 5% performance at the same power or 5 to 10% power benefit at the same speed on top of what they're delivering with the N2. So the N2P will support smartphones and artificial intelligence applications, and volume production for this is scheduled for the second half of 2026. So they're going to have a big boost in performance with the 2 nanometer technology in 2025. Then they're going to add another incremental boost in 2026 with the N2P technology. So on top of that, they also have the N16, and compared with the N2P, the N16 will provide another 10% speed improvement at the same power, or another 20% power improvement at the same speed, and another 10% chip density gain. Now, this is best suited for HPC, which is high performance computing, which is artificial intelligence, and volume production for this is also scheduled for the second half of 2026. So this is great news for NVIDIA stock investors that Taiwan Semiconductor has this technology ready. Volume production will start in 2025 for the N2, and then in 2026 for the N2P, which is going to provide a greater return on investment for those that purchase these GPUs that are going to be infused with this latest generation technology. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.